at this point, heading into the overnight session, heading into tomorrow, on the upside, the resistance areas are still valid and in play. You can see that the first test of the 92.75 to 96 quarter zone attracted sellers in the closing range over here. We got some profit taking, and in the event that the market continues to push higher, sellers can still be active at the resistance areas above. If we look at the daily chart, you can see that the market was way overdone to the downside, and that's an idea that we discussed last week, and it was due for a bounce, and even getting a 38% retracement provided very good reward potential to the buyers down here at support in the mid to high 2800s. So the risk reward really didn't favor new shorts down here, but as the market pops back up and starts testing better areas of resistance, perhaps closer to the 50% retracement level, or maybe even a little bit ahead of it, sellers can start to step back in, and we can then either balance within the recent range, we can balance below the 50% retracement level. In the event that the market heads higher, there is big resistance around the 61.8% retracement. So in this 3180 to roughly 3213, there's big resistance over here on the larger time frame where sellers are very likely to be active and quite aggressively step in over there, and that's if the market even gets there. So I know that we've seen a lot of strength since Friday and especially today, but this could simply be a bounce off of a deeply oversold condition, which then attracts larger time frame sellers as it pushes up into better areas of resistance, and then we could still get another wave of selling, and at least in the short term, the market could start to balance within the recent range below the 50% retracement level and certainly below the 61.8% retracement of this big sell-off. So typically when you get this level of panic selling in the market, a bounce off of good support is very normal, but it doesn't mean that the selling is completely done. And that's why we're going to have to continue to be quite flexible and nimble with our short-term bias and be open to trades on both sides. So as the market pushes up into resistance, we can still look for short setups. And as the market gets exhausted into some better support, we can still expect buyers to be active and look for long setups. So as day traders, there are very good opportunities on both sides of the market these days, and that's the best way to take advantage of this high volatility.